Hi everyone, welcome to yet another episode of Logical Investing with Shubhendu. So before we get into stocks, I wanted to talk to you about how do companies grow. Companies can grow in multiple ways. Imagine a company which is producing a product X. So natural way of growing their business is if they start producing 2X of what they were creating, then they will have higher profits, the company will grow. The another way is if they were producing one product, they can get into another new product and then they can have both of these two products earning revenue for them, earning profits for them. So that is the second way of the company's growth. The third way is that if they were operating out of one geography, if they can expand their business into multiple other geographies, then each of these businesses from the different geographies will start generating revenue for them. So that's the third approach. The fourth approach is a mixed or a hybrid approach, where you are expanding your products, you are also expanding your geographic presence. Now, the fifth one can be if you were producing a product which was good, if the product was doing good in the market, there is attraction for the product, but there is high competition. So what happens? You charge low to get the attention of the buyer, to attract buyers to buy your product. However, if there is an intellectual property which you can bring in, or it becomes exclusive, it becomes a very unique product which only your brand is selling, then of course what happens? That brand starts to command a premium. So either it is intellectual property, or it is the brand, or it is the uniqueness of the product which makes it very different, and it can yield significant amount of higher margins or profits for your business and also revenues. Another aspect can be the company's operating profit margins or the company's operational efficiency if that continues to go up. Earlier, say suppose all of the departments were working on paper, and now there is a company which is trying to bring all of those things into a digital format and then trying to reduce the time it was taking to make a decision. Then what happens? You are able to respond to the needs of the market faster. And when you do that, you become a better brand, you are able to service your customers better, and all of that happens. So with each of these, the company starts to become better as a business, become better as a brand. Now, when that happens, automatically revenues increase and automatically profits increase. The company, which is all good, has all great fundamentals and all of that, still the stock prices come down. How do we analyze such companies, right? The company which we are going to analyze today is NMDC. Let's start with NMDC. NMDC is engaged in the exploration and production of iron ore, along with diamond production and sale of sponge iron and generation and sale of wind power. Now, initially we talked about multiple products, right? NMDC has multiple products. It is into the exploration and production of iron ore. It is also into the production of diamond, the sale of sponge iron, and generation and sale of wind power. So these are multiple product lines which NMDC has, which is the first reason why companies like this should continue to grow. NMDC is National Mineral Development Corporation. It's a Navratna enterprise, and it is the largest iron ore manufacturer in India, accounting for 18% of the total domestic production, which is a massive number. The annual production capacity, the average annual production capacity every year has been 17 million metric tons for the past 5 years. Production in fiscal 21 was 34 million metric tons. If you just look at this number, this is from 17 million metric tons in the past 5 years, which was the average. The production in fiscal 21 was 34 million metric tons. What this implies is if the company was producing X, now it is producing 2X. So that absolutely is the second tick mark in our box in terms of a growing, very, very good and growing business. We start looking at the manufacturing facilities. The company has 7 iron mines spread across India, production capacity of 36 million metric tons per annum. It was 34 million production last year, and then production capacity is 36 million metric tons per annum. The company intends to increase its production capacity from existing 43 million metric tons per annum to 67 by 21-22. The company has made a capex of 2491 crore to achieve the target. So while from X to 2X has already happened from the average 5-year average 34 million metric tons, the company has intentions to increase its production to 67 metric tons per annum, which is a massive jump from where it is today. So the products, the scale at which the production is going to happen in the next couple of years is going to be massive. Right? Other businesses. Now let's start looking at this one. The company also operates the only mechanized diamond mine in India and at Panna, Madhya Pradesh, with an annual production up to 28,450 carats. Now, NMDC also has been allocated 2 coal blocks in Jharkhand. Company will start the operations of coal mining in near future. So we are talking about it being the largest iron ore producer. We are talking about increase of production capacity. We are also talking about a diversified business which is into diamond mining and also into coal mining as well in the near future. Then, if we come to the global business, NMDC holds 92.3% stake in legacy iron ore based in Australia. Now, it's not just limited in India, it is also has a base in multi countries as well, which is primarily focused on iron ore, gold, base metals, and the company holds 21 exploration tenements in southern Australia. International Coal Ventures Limited is a joint venture between NMDC, SAIL, RINL. The venture acquired a coal mine in Mozambique, Africa, where they have produced 1.78 metric tons of coal in fiscal 20. So we are talking about not just being limited to one geography, we are talking about geographic expansion as well. So this is the third tick in our box, in fact the fourth tick as well, which is a mix of product expansion as well as geography expansion. Now, coming to its intellectual property, which we also talked about, NMDC is one of the leading agencies involved in the exploration of natural resources, which could lead to new avenues for growth for the company. The total R&D expenses stood at 30 crores for the fiscal 20. So the company continues to invest in R&D as well, which will make its products better, its processes more efficient. Right now, talking about forward integration, NMDC is one of the world's low-cost iron ore producers, and they have ventured into steel making as well to benefit from their ability to procure iron ore. As all of us know, iron ore is used in the making of steel, and steel is a crucial component for all of the infrastructure development activities which happens in any country. We talked about the infrastructure growth. We covered in one of our videos on HG Infra how the infrastructure sector is going to get a huge boost from the budget this year, and with iron ore being a core raw material for all of this, and with NMDC trying to increase its production capacity, this is looking good. The company has procured 2,000 acres of land in Chhattisgarh to set up a steel plant with a manufacturing capacity of 3 metric tons per annum. Facility will be the largest blast furnace in India with a capacity of 4506 UM. This is all about the business of the company, and we now understand that NMDC ticks a lot of those boxes which are good tick marks for a company on a growth path. Now let's start taking a look at market capitalization. NMDC has a market capitalization of 48,809 crores. The stock PE stands at 4.69, whereas the industry PE stands at 10.4. So even if we compare all of the other players in the industry, NMDC's stock's price compared to its earnings is trading at a much lower valuation than the overall industry PE. Right. The interesting part is the book value. The book value of the company stands at 121. So, and the current price of the company is 167, which makes it very close to the book value. If you see one very important aspect here, the dividend yield. Dividend yield stands at 8.85%. Now, this is more than the interest which we get when we put our money in the banks. Now, this yield has been superlatively high last year. Given its dividend yield history, NMDC might continue to give similar dividends in the future as well. If we look at the ROCE and ROE of the company, the return on capital employed stands at 29.6%, which is very, very healthy. And the return on equity stands at 21.8%, which is great. Now, the promoter holding stands at 60.8%. In fact, recently, in the last 2 quarters, I believe, the overall promoter holding had come down by almost more than 10%. Promoters in this case are the government of India. They have liquidated their stake, and some of it has gone to DII, some of it has gone to FIIs, and some of it has come to the retail public. Now, if we start looking at the financial ratios, we see that the Altman Z-score stands at 8.99. This is more than 3. This is really great. The PEG ratio stands at 0.24, which should be less than 1. We are good here. The current ratio and the quick ratio, which should be more than 1, stand at 3.14 and 2.81, which is really good as well. The overall reserves of the company is 35,000 crores. The debt to equity stands at 0. So, totally debt-free company at this size. And the overall profit growth has been in the last 3 years almost 10%. The profit growth last year has been 175%. The sales growth has been 122%. If you start looking at the stock prices, the stock price, this we are talking about 1 year price chart. So the stock price, probably in early April last year, it was around 140. Right now it is trading at around 166. It has just recently started its up move from around 134 levels. So this is just getting started with its journey. If we start looking at the overall max charts, we see that NMDC has made an all-time high of 532 in January 2010, and since then it has come down. Now if we start looking at the highs which it had been making, if we see, then in 2014 it tried to break out, and then it made a high of around 184, 185. Then it came down and it tried to make a high again here in May of 2021, and we see that the high has been 180, around 180 levels, 190 levels, and then now it had come down and it is again starting to go up. If NMDC is able to go past this 200 mark, we can definitely see that NMDC would continue its growth journey, because the earnings continue to grow in case of NMDC. Now if we start looking at the quarterly results have been nothing less than stellar. The quarterly results from March 2019, where the sales was 3,643 crores, it has now come to, in the December 2021 crore, the sales stands at 5,874 crores, which is almost 80% more than the numbers in March 2018. If you look at the operating profits from 2,090 crores operating profit in March 2019, the operating profit in December 2021 is 2,611 crores. The operating profit margin has been traditionally high, 57%, 53, 47, 39. It had come down. In between it had 64%, 62, 64, 46 and 44%. Now what it clearly says is, while the operating profit margin has come down, we would still see that it has a very healthy quarterly operating profit margin. If you start looking at the net profit from 1,449 crores in March 2019, the net profit stands at 2,050 crores in December 2021. If we start looking at the annual profit and loss numbers, we see that 15 years the company's sales has grown from 4,186 crores in March 2007 to 26,000 crores in the trailing 12 months. The operating profit has increased from 3,224 crores to 14,140 crores. The operating profit margin continues to now stabilize around the operating profit margin. Earlier it was really high. Now the operating profit margin is hovering or is stabilizing around 50, 57, 54 kind of levels. This can be attributed towards the new investments which are being made in the newer areas by NMDC. Now the overall net profits, if you see, from 2,320 crores in 2007 to 10,398 crores in the trailing 12 months. Now if we start looking at the reserves of the company has grown from 5,647 crores in March 2007 to 8,000 crores in March 2008, 11,000 crores in 2009, 27,000 crores in 2013, 29,000 crores in 2014 to 35,000 crores in September 2021. The borrowings have slightly increased in the last couple of years, and then right now it stands at 155 crores. If you look at the operating cash flows have been hugely positive. You see that in March 2021, the operating cash flows stood at 7,266 crores. The debtor days have been consistently reducing from last year, March 2020 to March 2021. The debtor days have been coming down from 69 to 51. The working capital days has also come down to a very staggeringly low number, from 71 working capital days to 15, which is a very healthy sign that the company is now able to manage its working capital cycle within 15 days, which is a phenomenal number for this big size of the company. So this is all about NMDC. Historically, when we started looking at the numbers, the financial data, we have seen that the company continues to reduce its debt, the company continues to increase its revenue, the company continues to increase its profits, and the company is also increasing its overall production capacity and is expanding into new geographies, and it's trying to do forward integration and all of that. These are the ways in which we analyze companies. We have to find out companies which are good in all of the sense. These companies definitely deserve to be in our radar. Just because we discuss this stock, please do not jump in to buy this stock, because this is not a stock recommendation video at all. Our intent is to learn the ways in which we start looking at companies, the way we start analyzing business, the way it makes sense for us. Every person is different. Every person's investment style is different. Every person's risk appetite is very different. My risk appetite may be very different from that of yours. Yours may be very different from somebody else. What I'm trying to say is, if we are able to understand the ways in which we analyze business, you would then be able to devise your own strategy. You would be then able to analyze the parameters of different companies and then figure out what is a best investment decision for you. That's all for today, folks. Thank you so much. I hope you liked this video. If you liked it, please do hit the like button and also share this video with your friends, colleagues, and family, so that more and more people can see this video and be associated with us. Thank you so much. Happy investing. Happy logical investing.